Good afternoon. This is Ken Long from Tortoise Capital on the afternoon of August 15th, 2009. Hope you're having a great weekend. I want to do a quick look at the market daily summary for this weekend, looking ahead towards Monday. We are still in bull quiet and have been for a month. On an annual and a 10-day basis, the market is right in the middle, so there's no directional bias one way or the other. And you can see on the Williams percent R10, the short term, the market had been overbought for a considerable period of time, but has now pulled back into the midpoint. In the gap stat, I just highlight 60% of the time in the last 30 days, 18 times the market has reversed its morning gap. You can see the max pain and the min pain candidates. These are at the extremes of performance over the last 10 days in the Dow, the S&P, the NASDAQ, and the very liquid ETFs. And it's from the extremes that outperformance occurs on a shorter term basis, so that's why we pay attention to it. No signals on the overreaction or the channeling. You see the pivot points right around for SPY right at 100.70. The market indicators extremely low volatility, powerful bull trending market with an ADX greater than 35. It's hard for it to maintain that for much longer. We've seen it this week actually pulling it back. If you look down here at market ADX, for example, it's been above 35 for a week, and now you can see it's starting to roll over. And actually, the green line, the positive directional indicator, is weakening, and the bear has not really caught up yet. But you can see on this histogram, which reflects the difference between the green and the red line, that it's actually rolling over and getting smaller. So the bears are not winning. It's just that the bulls are losing steam. So we've been sideways for a week, is all that tells us. We've seen this move of the last 30 days or so on this 30-day regression line slope is the dark blue line. That corresponds to the slope of this line here. You can see for all of this move here, that corresponds to about these 30 days, how powerful that move was, but now you can see it actually starting to level off. I'm interested on daily short-term setups of a stealth move developing in cow, which is an ETF that tracks livestock. That has been beaten down more than any of the commodity ETFs, while agribusiness and grains have been doing better. And so the cows have been lagging, and maybe it's time for them to catch up. So I'm going to start looking at that as a value play, as a way to return back to fair value. There may be a stealth trade inside there. So that's what it looks like going into next week. That is a market that is pausing at the top of a very powerful bull move. It hasn't shown any willingness to sell off sharply with volatility low. That doesn't surprise us, but at the same time we're concerned about the downside here and preserving profits from this big move as well. But certainly because it's a bull and it's been pausing, upward signs of strength should be bought and piled on. If SPY can get through 102, that would be the previous swing high. If it can break through 102, then that is extraordinarily bullish, and then it's off to the races north once more. So that's a quick look at the daily summary report for Monday, going into the 17th of August. Thanks for your attention.